So what are your options when looking to do a possible trade-up? So you've outgrown your starter home. Maybe you realize you need more bedrooms with the arrival of another child. Perhaps you've been working from home all year and require a separate office space. Or maybe you've come into some IPO money and your stocks are doing very well and you're looking to diversify into a higher value property. Whatever your reason is for trading up, you're probably wondering, what are your options when it comes to a potential trade-up? For buyers with enough capital for a separate down payment, choosing to buy a new home while renting out your current place would be a great option. The significant benefit here is that you'll own an investment property that does get rental income. The first step in seeing if this is a viable option for you is to work with one of my trusted lenders to get pre-approved. From there, you can see if this option is available because the lenders will calculate your debt to total income ratio. Be wary, some lenders are not going to count your future rental income, so they will take that into consideration. If, according to this lender, this turns out to be a good option for you, then you should by all means pursue the holding of several properties all at once to maximize your real estate portfolio. However, not all buyers have enough capital for this kind of investment. If this is the case for you, you're going to have to consider selling your house first. The benefit, though, is that you can gain the capital you need to fund a down payment for your next house. The challenge? Once you sell your house, you may need to find another place temporarily until your next house is purchased. Now, I know this may sound scary, but that doesn't mean you don't have choices. You can ask for what they call a rent back, meaning you can rent back the house you're selling to its new owners for up to 2 months. This would give you time to find a new property and submit offers while you are in contract or even after you have the funds already from the proceeds of the home. At the same time, if you got an offer much higher than you thought you could get, most people actually realize they have no issues renting an Airbnb or staying at a hotel for the interim in exchange of tens of thousands of dollars. I would do that trade all day. Now, if neither of these options sounds right for you, consider a bridge loan. Buy a new house with the assumption that you'll sell your other house as soon as you close on the home. You won't feel as rushed to buy a home and move in, but it is important to know that there is still a period where you carry a mortgage payment for both properties simultaneously. Be also aware that the borrowing interest rates and initial closing costs will be much higher, but this is also for a short-term basis. In order to have this option available, you will need a large percent of equity from the previous home for an investor to take a bet on this kind of product. These are the general options for people looking to do a trade-up in their home. With any and all of these paths, I can help you every step of the way. If you aren't sure which path is right for you, let's talk about the pros and cons and your situation. If you have any questions or are looking to chat about the Bay Area real estate market, let's talk. I'm never too busy to have a private conversation and share how I can help you every step of the way. Thanks for tuning in to another episode.